Gold is now at real all-time highs and is in real money terms now higher than it was in February 1980 at $850 per ounce. Gold will rally further on heavy central bank buying and also from China and India, as well as ETF buying. We think also rate cuts will happen further in 2025 to prevent a recession and move on to a soft landing of the US economy. Gold's little brother, silver, even performed better so far in 2024 with the highest price level since 2012, around the $34 mark. Physical buying happened strongly from China for their solar boom, and also the solar panel production for the world, and also India is purchasing. Also outflows in silver ETFs reversed now, and in October, silver ETFs saw huge inflows. Same happened in gold ETFs with over $4 billion inflows net, a record. But things move on. Citibank revised their 6 to 12 months forecast from $38 to now $40, which we think is still conservative given the expected turmoils through a possible short squeeze we see coming. It might happen, it might not. We will see. But something is here really cooking. Also, Swiss bank UBS is bullish on silver prices. They see silver outperforming gold in 2025 with a potential test of the silver-gold ratio below 70. With the 6-year deficit and no new mines, the deficit shall stay many years, and the depletion of above-ground inventory moves fast. How long can this last with no rising prices? Well, we will see. We think soon game over through a short squeeze. Some US banks will get in trouble for sure. COMEX statistics showed an open interest in silver of 141,580 contracts. Each contract counts for 5,000 ounces silver. That's almost 708 million ounces silver, which is almost 1 year world production. Makes no sense when you understand supply-demand functions in a real world. Each move of $1 in silver leads to $708 million losses. You never short a market in that size, because the silver market is really small, when you know that the market deficit will not diminish for a long time. By the way, silver is the same situation like in uranium on a side note. Why put those banks themselves on risk for such a stupid trade? Well, it's greed, ladies and gentlemen. When the coverage starts, silver can move to absolutely unexpected highs. Buyback of large physical silver will lead then to brutal losses. And don't forget, the silver market is quite small. Also crazy are the proportions of paper to physical silver, which are now around 420 to 1, according to the Jerusalem Post. Also, the COMEX registered inventories reached historic lows. Normally, less than 0.25% of future contracts stand for delivery. Guess what happens when this might change? Good night, COMEX. A new player could now again be Russia, as they think about silver as a reserve currency like gold. That would mean that more silver will be taken out of the market and physical supply will tighten even more. Sounds like James Bond from Russia with love, but now they are in love with silver in addition. By 2027, they want to buy for over 51 billion rubles silver, which is over 520 million US dollars. Sounds like a small amount, but don't forget, this is the start and the silver is stored away, so other countries might follow. This move can be compared with the 1973 oil embargo, with Russia exploiting control over a critical resource to put some geopolitical pressure on the West. The USA, for example, rely for 80% on silver imports. More countries could follow Russia and buy silver like we see through China and India. If more and more silver is removed from the system, then prices can explode fast and high. Fancy times are in front of us, and if we look at the charts, a silver price of $150 per ounce is not out of reach. I'm not predicting it, but it looks to me like it could happen the next 5 years. Don't forget, we are in the 6th year of the silver deficit, and the 6th year was always in history a breakout when deficits occurred. Last time silver went up from the low in 2004, around $7 to up to $30 in 2008. Then it moved to over $60 in April 2011. It looks like now is the time for the next big bull cycle and move, and I think it has started. If history repeats, March 2020 was the low around $17. You can do the math by yourself. Our call for silver is $41 next and then $61. This could all happen in 2025. If the squeeze comes, we might see higher prices. Also, do not forget that we live in a huge change in the use of silver. I think it's a paradigm change. The industrial component is rising massively, plus solar and military. In addition comes now nuclear power. We estimate already a silver use of 65%, could be even going to 70% already, in industrial applications, reducing the investment quota to 35% or below. It is expected that silver demand doubles in the next 10 years for industrial applications, jewelry production and silverware fabrication. The transition to an electrified economy doesn't happen without copper and silver. The Silver Institute sees industrial demand with over 654 million ounces silver this year. Higher than expected photovoltaic capacity additions and faster adoption of new generation solar cells raised electrical and electronics demand by a substantial 20% to 445 million ounces, the Institute said. We think this could be much more. According to Sprott, demand for silver from the makers of solar panels, particularly those in China, is forecasted to increase by almost 170% by 2030. That's only 5.5 years from here, to about 273 million ounces, 1/5 of total silver demand. The EIA, International Energy Agency, says China more than doubled its investment in solar PV manufacturing between 2022 and 2023. And it goes on and on. FX Street quoted a research paper by the University of New South Wales that found solar manufacturers will likely require over 20% of the current annual silver supply by 2027 already. By 2050, solar panel production will use approximately 85 to 98% of the current global silver reserves. Those are huge numbers. We will see what happens. In the first 4 months of 2024, India imported more silver than they did in the whole 2023, with a new record of plus 4,170 metric tons. Demand is being driven by rising solar demand and investor interest. Interesting is also what happens in Texas. Solar and wind power have found an unusual recipient in Texas. The oil-rich state is home to the prolific Permian shale oil basin. Residents who are allowing wind farms on their private lands told the Global and Mail newspaper they are not climate activists. For them, renewable energy is not a route to decarbonizing Texas' economy, but an opportunity to broaden their sources of income through lease contracts with developers. Yes, of course, it's all about business, ladies and gentlemen. And one thing really has Texas aside of oil, this is land space, free areas. The article says Texas' deregulated power market is a mecca for wind and solar power, in addition to battery storage. This has made the state one of the largest beneficiaries of green stimulus money from the Inflation Reduction Act. Since the IRA was passed, Texas has racked up $8 billion in clean energy investments. Since 2011, wind power has quadrupled to nearly 40,000 megawatts, or nearly 29% of total available generation. Solar power growth has surged from 70 megawatts in 2011 to 26,814 megawatts today. That is use of silver. In 12 months, that could jump by another 56%. Battery capacity could more than double in the next year to over 19,000 megawatts. What helps the market too is the falling price for solar panels, now down from $100 per watt in the year 1975, now to almost 30 cents per watt in 2024. If the demand for silver in solar power doesn't blow the doors off the silver price in the near future, it may be a change in battery technology that does it. Here comes the new Samsung solid-state battery into play, with silver as a key component. Samsung's new solid-state battery technology, incorporating a silver carbon composite layer for the anode, will be a game changer. Silver's exceptional electrical conductivity and stability are leveraged to enhance battery performance and durability, achieving amazing benchmarks like a 600-mile range, a 20-year lifespan, and 9-minute charge only. Those are arguments where I would say, oh, I would also buy an electric car probably. Investment professional Kevin Bambrew provided estimates showing there could be up to 5 grams of silver per cell in these batteries, meaning a typical EV battery pack containing around 200 cells for a 100 kilowatt-hour capacity could require about 1 kilogram of silver per vehicle, he stated. If these numbers are right, it could mean a major demand driver for silver going forward. Even if 20% of electric vehicles were to adopt Samsung's solid-state batteries, the annual demand for silver would be around 16,000 tons against total current production of 25,000 tons. Even if this would be half, or let's say 1/4 of it, the silver market will never ever get out of the deficit. Kitco cites a report that says something is already working with big automakers to incorporate its battery technology into the electric vehicle development, including an agreement with Toyota to begin mass production of those solid-state batteries in 2027. Lexus vehicles are also scheduled to be among the first to adopt them. A huge challenge would then be the cost of the battery, of course. We will see how that goes. On the silver supply side, global silver mine production fell by 1% to 830.5 million ounces in 2023. Output was constrained by a 4-month suspension of operations at Newmont's Penasquito mine in Mexico due to a strike. For 2024, it really looks not better. In addition came lower ore grades and mine closures in Argentina, Australia and Russia. The Silver Institute reported a 184.3 million ounce deficit in 2023 on the back of robust industrial demand and estimates 215 million ounces deficit for 2024. I think they are now already at closer to 265 million ounces. We think it's much higher. We think the deficit is closer to 280 to 300 million ounces silver. Anyway, the silver price will move higher, and good silver and gold miners should be owned alongside with physical silver and gold. I would not speculate on the squeeze only, really. It is a possibility that it could happen, but I would prefer that silver moves step by step on the stairway. But good companies will profit from higher silver and gold prices as they will occur. Examples are MAG Silver, Endeavour Silver, First Majestic, Corp, and also the Global X silver miners ETF. Discovery Silver is a great bet on silver in Mexico, becoming a mine by 2030 latest, hopefully, if the politics then do not prohibit open pit mining. That's the only thing. This is why I say it's a bet. But if the bet works, you can make a lot of money. You find all the information also on our Commodity TV app in German and English and everything around commodities. We look forward to your like, and more important, please subscribe to our TV channel. Please note the disclaimer. The stocks here presented are part or will be part of the SRC Mining Special Situation Certificate, and I'm a shareholder in the companies. Thanks for watching us, and bye-bye from Switzerland.